Diageo shares are on the move after the spirits and beer maker beat analyst sales growth for its just-ended fiscal year. Organic sales rose 16% compared to analyst forecasts for 13% growth, as Diageo saw strength in everything from Don Julio Tequila in the U.S. to Bailey's in Europe as bars slowly started to reopen. The company forecasts sales momentum continuing into its new fiscal year, along with improvement in operating margins. Joining me now for a look into Diageo is CEO Ivan Menezes. Ivan, good to see you this morning here. I don't think a lot of folks appreciate how global your business really is. Let's start in North America. What's the state of the recovery here in your North America business?
Good morning. The recovery has been very strong. You know, when we went into the pandemic, Diageo North America, our business, was performing well. We had good momentum. And then through the last 16 months, we pivoted very quickly to some terrific marketing, innovation, execution against where the consumer shifted to. And coming through that, our business has accelerated. In these results, in the U.S. spirits business has grown 24%. Our Casamigos business has more than doubled. Don Julio has grown nearly 70%. Even a brand like Bailey's in the U.S. grew 31%. We're taking market share, steadily growing market share, and the business is premiumizing. In Diageo's global results, where we grew 16%, the top 25% of our business, the higher price points, like Johnnie Walker Blue and Don Julio 1942, those products grew 36%. So two trends at work in the US and actually around the world. Spirits gaining from beer and wine. In the lockdown, people discovered their inner mixologist. And rather than reaching out for that boring glass of white wine or insipid bottle of beer, they discovered a Don Julio Paloma, a Bullet Manhattan, or Johnnie Walker on the rocks. And those habits will stick, because once you discover the finer things in life, you don't go back. And so I'm feeling very good about the momentum here. Our team is executing really well. We've stepped up our marketing investment significantly. In these numbers, where sales grew 16%, our marketing investment grew 23%. In the US, it was even stronger. And the conditions of people drinking better and moving away from wine and beer to spirits, we believe will continue.
Yeah, forget that boring white table wine, Ivan. Sign me up for some Don Julio. But do you believe your business is taking market share away from the hard seltzer industry? We have been getting a drumbeat of bad news from many companies playing in the hard seltzer market of late. Are you taking share from them?
Well, we look at the total beverage alcohol market in the US, and Diageo is only a 7-share player in that market. It's very important to remember. We still have only a small share of that market. We do participate in ready-to-drink products and seltzers. It's a smaller part of our business. The trend we see sustaining is one of convenience. Consumers in America are looking for high-quality drinks from strong brands in single-serve, convenient, and ready-to-serve formats. We believe that's a growth engine. And we participate in it through seltzers under Smirnoff. We have a line of full-flavored malt beverages. And what I'm most excited about is the spirits-based cocktail single serves that we've now introduced in the US. Crown Royal has a lineup. Tanqueray is in. Kettle One Vodka has a spritz. Those are doing really well. They're growing market share. It's still relatively small. But again, most of that growth is coming from beer and wine. Our premium spirits business is still growing very strongly. So convenience is the factor that's driving. And seltzer did have astonishing growth. It had a lot of competitive entry. You are seeing some natural slowdown there. But the overall consumer state of wanting convenient, high-quality drinks in single-serve formats, I think will keep growing.
One spirits or several spirits that stood out to me in your earnings release, I mean, Casamigos, that is the George Clooney brand, tequila brand you bought several years ago for about $1 billion. That organic sales in the year up 125%. Don Julio, another tequila brand that you own, up 68%. Why are you seeing so much strength in that particular market?
The tequila category has got very good dynamics that are supporting the growth. It cuts across consumer demographics, multicultural, age, gender. It cuts across occasions and day parts. So in the old days, tequila was largely about the shots and the margarita. If you look at the drinks repertoire now with tequila, it's much wider. Fine tequilas on the rocks or with soda, the Paloma, the classic cocktails with tequila, old fashions and the like. So that's happening. And agave has a very positive association with the American consumer. So we believe that there's very attractive growth going ahead. Now, we are growing twice as fast as the market. And the top end of the market is what's got the fastest growth. That's where Casamigos and Don Julio plays. But we expect tequila trends to continue. It's about 20% of our business in the US. It's about 8% of our global business now. And it's very fast growing. And we have trouble keeping up. That Don Julio 1942, go out and buy it. We don't have enough right now because the demand is so strong.
How are, it is a different story a little bit over in Europe. How are how is the lack of travel and restrictions, just continued indoor restrictions, impacting your European business?
So what we're seeing in Europe is the gradual opening of the on-premise is very positive for us because unlike the US, where I'd say 4 out of 5 drinks in America is consumed at home, roughly speaking. And in Europe, it's about 50 to 60% is at home, 1 in 2 at home and 1 in 2 out of home. So the pandemic lockdowns of the on-trade and hospitality hit us more severely in Europe. But as it's opening up, and the UK is opened up, Ireland is just opening up, the continent is also opening up, we're seeing the recovery come back fast, just like in the US, because people's desire to socialize outside the home, be it at bars or restaurants or sporting events and festivals, is very strong. And their desire to spend on higher quality premium brands in these events, we're seeing it happen pretty much across the world as conditions improve. So one of our big brands in Europe is Guinness, which is largely consumed draft Guinness in pubs in the UK and Ireland. As the pubs reopen, we see Guinness coming back very strongly. So I expect this improvement to continue, but clearly we're not out of the pandemic, the virus volatility that's still out there. But as conditions improve, we see the out-of-home market recover very quickly.
Speaking of spending, I mentioned Casamigos that you bought, I believe, in 2017. You also came out in 2020 and bought Ryan Reynolds Aviation Gin. What else is on your radar screen in terms of acquisitions?
Well, we're keen to buy more. We have a strong balance sheet. The company and the year we just finished was a record year of cash flow. We had £3 billion of free cash flow. But we're looking for quality brands, premium quality brands that have a long runway for growth. And we're constantly on the hunt. But we're also very disciplined. So we will only buy stuff we really believe can offer good long-term growth at attractive margins. And we are interested at the premium end of the spirits market. So that we have a pipeline of projects we're constantly looking at. For every one we buy, there are dozens we reject. But we certainly would expect to continuing with bolt-on acquisitions of attractive brands.
Ivan, real quick before we let you go, what's your go-to drink of choice?
Johnny Walker Black, on the rocks with a splash of club soda.
All right, fair enough. I dig it. I can get on board with that. We'll leave it there.
Yeah.
Diageo CEO Ivan Menezes, good to see you. Stay safe. We'll talk to you soon.
Great to see you. Thank you.